Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China XLX FERT interim report. China XLX Fertilizer Limited offers a diverse range of businesses and services across various industries. The company's primary products include compound fertilizers, urea, methanol, liquid, ammonia, dimethylformamide, melamine, furfuryl alcohol, furaldehyde, humic acid. In addition to these, the company provides vehicles, urea solutions, and related differentiated products, medical intermediates, coal mining and sales, electricity distribution and sales, gas production and trading, testing equipment, manufacturing, chemical production, intelligent equipment, manufacturing, head and beauty products, agricultural production and consulting services, international business and trading, engineering, design, construction, human resources, provision, anti-corrosion services, transportation services. The skyrocketing China XLX fertilizer stock price. A confluence of factors, China XLX fertilizer's stock price has surged by over 100% in the past year, driven by a combination of strong financial performance, strategic business expansions, favorable market dynamics, and positive investor sentiment. The company's robust financial results, including a 23% increase in profit attributable to owners in 2024, have been bolstered by an innovative marketing model. Strategic expansions, such as the launch of new production facilities and projects, have also contributed to the stock price growth. Favorable market conditions, including increased demand for certain products and reduced supply due to EU tariffs on Russian fertilizers, have further driven up the stock price. Additionally, shareholder-friendly initiatives, such as insider buying activity and a consistent dividend payment history, have been viewed positively by investors. Analysts have a positive outlook on the company's growth potential, forecasting earnings growth of 27.07% per year. The stock is considered to be trading at a good value compared to its peers and the industry, suggesting a promising short-term performance. Overall, the confluence of these factors has contributed to China XLX Fertilizer's skyrocketing stock price in the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On one hand, revenue growth is driven by increased sales volumes of products such as compound fertilizers, melamine, and DMF due to expansion of terminal sales channels and promotion of new marketing models. Additionally, strategic agreements with upstream suppliers have led to stabilized selling prices for urea and methanol. On the other hand, decline in revenue is attributed to factors such as decreased average selling prices, fluctuations in raw material costs, and market supply and demand mismatches. Specifically, liquid ammonia has seen a 16% YoY decrease in average costs and a downward trend of raw coal prices, while melamine's average selling price dropped by 9% YoY due to decline in raw material prices. Overall, revenue growth is influenced by factors such as sales volume increases, strategic agreements with suppliers, and expansion of terminal sales channels. Conversely, revenue decline is driven by decreased average selling prices, fluctuations in raw material costs, and market supply and demand mismatches. Net income and profit margins. A decline in performance. The company's net income experienced a significant decline of 19% from RMB 938 million to RMB 757 million. This decrease is attributed to the urea segment, which saw a YoY drop of RMB 609 million, 16%. Conversely, the compound fertilizers segment showed an increase of RMB 156 million, 5%, YoY. Profit margins also took a hit, decreasing by 1% in 1H 2025 compared to the same period last year. The urea segment's profit margin plummeted by 10 percentage points to 21%, while the compound fertilizers segment saw a decrease of 2 percentage points to 16%. These declines indicate a shift in the company's performance, warranting further analysis and potential adjustments to improve profitability. The company is indeed generating positive operating cash flow, as evident from its net operating cash flow of RMB 1,246,933 for the 6 months ended June 30, 2025. Additionally, a significant increase in working capital of approximately RMB 1.7 billion suggests that the company's operations are yielding sufficient funds to cover its expenses and investments, further indicating a positive trend in operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was a decrease in debt level from 40.97% to 31.28%, indicating a reduction in financial leverage. However, this trend was reversed with an increase in debt due to new loans of approximately RMB 26.7 billion. On the other hand, interest expenses showed a notable decline, decreasing by RMB 29,236 from RMB 152,040 in 2024 to RMB 122,804 in 2025. This reduction suggests that the company has managed to optimize its debt structure and negotiate more favorable interest rates, resulting in lower interest expenses. Management is optimistic about the company's financial outlook, citing effective management of investments and assets to ensure continuity of funding. They are also monitoring debt-to-asset ratios to support business growth and maximize shareholder value. Additionally, they have secured long-term bank credit through adjusted loan structures, positioning the company for future success. There were no notable acquisitions or divestitures in this period. The company's financial activities remained focused on organic growth and internal development, with no significant external transactions taking place. The company's financial summary reveals a consistent commitment to shareholder value creation. In the past 2 years, the company has demonstrated its dedication to rewarding investors through dividend payments and share buybacks. Specifically, it has paid dividends in both 2024 and 2025, while also purchasing shares in these same periods. This dual approach underscores the company's focus on returning value to shareholders while also maintaining a strong financial position. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights potential issues with inventory buildup and supply chain disruption. Industry production growth has slowed down, causing a mismatch between supply and demand for methanol. To mitigate this, the group signed long-term agreements with upstream suppliers to stabilize prices and increase sales volume. However, an analysis of inventory levels reveals mixed results. While raw materials and work-in-progress inventories have decreased, parts and spares, as well as finished goods, have increased significantly. This may indicate potential supply chain disruptions or inventory buildup concerns, warranting further investigation. That concludes the financial summary for China XLX FERT. Feel free to comment below, and I will be happy to answer them when possible.